Real estate investing, or buying rental properties, can be an investment with returns far exceeding what you'd typically earn in the stock market. There are many benefits to buying rentals, but is the potential for extra profit worth the risk and headache of being a landlord? How exactly does buying property compare to investing in the stock market? With huge variations in returns you could earn, in addition to the amount of time spent on each investment choice, carefully consider the better place to put your hard-earned money. My name is Chris, and I help teach people about money, personal finance, and investing. If you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. One of the largest advantages of investing in real estate is the ability to use leverage. Banks will lend the majority of the money needed to buy rental properties, with investors only needing to put 20% or so down. Ask a bank to lend the majority of money on a stock purchase and they'll laugh you out of the building because stocks are seen as a much more volatile and risky asset. This leverage increases returns substantially when things go well, but borrowing money also increases risk. When property prices rise, the return on equity is much higher than if you were to own the property outright. But if prices drop or rental income stops coming in, this could be a major problem. Take a look at how home price fluctuations can impact your investment returns. If you put 20% down on a $400,000 home and the prices increase 6% in 1 year, that's an incredible 30% return on your down payment. Alternatively, if prices drop 6% in 1 year, that's a 30% loss. It's incredibly simple to dollar cost average or put a set amount of money into the stock market on a regular basis, which cannot be said for buying rental properties. Contributing 10, 15, or 20% of your income to a retirement account couldn't be simpler. There's no need to constantly be on the lookout for your next investment, as you can automatically put your money into the S&P 500 or similar fund with no effort required. As you accumulate wealth with real estate, you're always going to be thinking about your next move, whether it be selling and rolling profit into a new place or purchasing an additional property, which can only be done once you reach a certain amount saved and have the financing lined up. While you're saving the funds for the next purchase, which could take years, the cash sits in a bank account earning little to no interest. Buying the right property can be incredibly rewarding, but it takes countless of hours of searching and some luck. Buying real estate often requires an incredible amount of money. A 20% down payment can be almost impossible to save up when you're not earning a huge income and haven't been investing for a long time. Not only that, you should have reserves set aside in the event the property goes unrented, tenants stop paying, or surprise expenses arise. Saving up 20% or more for the down payment, money for closing costs, funds for immediate improvements, and 3 to 6 months of expenses on the property can be intimidating to say the least. Does it really make sense to put money into a savings account for many years until you finally have enough to purchase a property, or are you better off investing into the stock market immediately so the money can begin to grow? There are programs that help first-time homebuyers buy a multi-family home with a 3% down payment if they're going to live in the property, but that raises a question. Should you even be investing in real estate if you only have 3% down? You might believe that once you save up enough money for a down payment, you'll be able to receive the funding for a property, but this simply is not the case. In addition to down payments, banks are going to analyze your credit and finances, and many times they're going to want to make sure you personally earn enough money to pay the mortgage on the rental, in addition to your own bills. This presents a challenge for those who don't have a high income, have any debt like a mortgage, car payment, or student loans, and for those who don't have a W-2 job. Self-employed individuals or business owners often have a challenging time qualifying for loans because of tax write-offs that reduce their annual income. Even if you earn a lot of money, taking many tax deductions could disqualify you from getting a mortgage. Becoming a good borrower in the bank's eyes can be a grueling process, and there are no guarantees of ever getting there. There are various programs available for less than ideal borrowers, but they will be harder to come by and the terms are going to be less desirable. The biggest obstacle to owning rental property is the headaches you'll get from managing and dealing with tenants. No one wants to take calls at 3 in the morning to fix toilets, deal with disrespectful renters that destroy the property or refuse to pay rent. These situations are uncommon for responsible landlords who carefully screen their tenants and stay up to date on maintenance, but those early morning calls are still possible. In order to alleviate the burden, you could hire a property manager who will deal with placing tenants, doing repairs, and so on, but that will come at a price, usually about 10% of the monthly rent, which can severely eat into or eliminate any monthly cash flow. As a rule of thumb, owners who choose to self-manage spend 4 hours each month managing a rental property. There are certainly amazing investments to be found that provide a healthy amount of monthly cash flow, but actual cash flow is often much less than investors initially anticipate. Novice landlords often overlook or underestimate just how much money it costs to maintain the property. One of the reasons for this is that it can be difficult to determine exactly how much you're going to spend on maintenance. Unfortunately, inaccurately predicting these figures could make a terrible deal appear to be an excellent one, and by the time you realize the true cost, you're stuck with the place. Investors need to place an accurate number on maintenance, taxes, insurance, utilities, capital expenditures, vacancies, management, and rental income. Unless you're an experienced landlord, this can be easier said than done. By the time all of these expenses are tallied, the monthly profit could be non-existent. Unless you're very wealthy with many investments, purchasing a rental property could result in a lack of diversification. For example, if you save for years until you finally have enough money to make the purchase and sink nearly all of your money into one property in the form of a down payment and repairs, you have many of your eggs in one basket. What if the property has issues that you are unaware of, such as problems with the structure or issues with the location? What if the neighborhood isn't what you thought and values are actually trending downwards and no one wants to rent there? What if the property suffers from a fire and you enter a long negotiation with the insurance company about your settlement? Issues that surface could be extremely costly and time-consuming. Before purchasing a property, ask yourself if you're going to have too much of your money in one single investment. Selling investment property takes both time and money, making real estate one of the least liquid investments out there. The transaction fees can be expensive, and unless you receive an amazing offer, the negotiating, financing, and inspection process can take months. Once the property is sold, you could be faced with a large tax bill unless you plan on hiring a lawyer to perform a 1031 exchange, which could defer taxes if you buy another property. If you encounter problem tenants, selling the property could be very difficult unless you provide a steep discount, and hanging onto a property that isn't producing income is a big risk which can quickly drain your wallet. If you relocate and choose to sell, you're going to be faced with the decision of where to put the funds, whether it be into a new property or other investment. Add these things to the fact that most tenants are going to want to stay in the property for a year or more, and you have a long-term commitment. Not every investor is cut out for owning rental property, but those who are willing to put in the effort have the potential to become extremely wealthy. Whether your goals are to save for retirement, a college fund, or become financially independent, investing in real estate has proven to be an excellent vehicle to get there. Just be aware of the downsides and be prepared to do your due diligence before jumping in.